Good afternoon, guys. It's Saturday, October 2nd. My name is Dave Coker, and this is Talking About Finance. And you know how it started out. Very noble intentions, 7 slides for 7 days. But me and my buddies talk about the markets constantly, and now we're up to 9 slides. I do try to bring the best and the most funniest stuff, most interesting stuff to your attention. So let's kick on and see what we got for this week. Now, we always start out by looking at what the S&P 500 did. And those who couldn't see this coming, my God, I did talk a fair amount on this video series about the weakness in the markets and things were overpriced. And markets really got whacked down about 221 basis points last week. Now, there's still a lot of news coming out about Evergrande and scaring the markets. But what I find most interesting about China is that besides me and my buddies, I don't see much media coverage on the Chinese slowdown. And there definitely is a slowdown. I'll show you how I know. I got some anecdotal data that's particularly interesting. And we'll take a look at that a little bit later. So as I said, the S&P 500 dropped, and it's not a really good way to finish the third quarter, but it is what it is, right? The VIX closed last week at 21.15. It spiked up as high as 23.35 on Tuesday. So fear is coming back, but not loathing yet. And that's actually good. Once again, looking at data I get from one of my research services, we could see that retail was buying heavily throughout the week. Now, there's two ways you can view this. It's good that retail's there to pick up the pieces to buy shares as prices tumble, as institutional and other bigger players sell, or you could view it as, well, it's like what P.T. Barnum said. There's a sucker born every minute. Now, if you're trading, if you're going long, I should say, hey, I'm not going to look down on you. Just hold on to it forever, right? As long as you know what you're buying, and most importantly, you know why you're buying it. Myself, I keep the faith. I certainly have no intention to dump any stocks. Why? Because I get dividends, and dividends are still going to be paid even if there is a market crash, a real barn burner of a market crash. Doesn't matter. Still, dividends get paid. And guys, if you don't invest for dividends, you might want to consider some of your capital into cash flow generating assets. Why? I get paid every day. And that's a beautiful way to live. It's really, really fascinating. So think about this. Oh, yeah, and this is a really good one, right? The ladies have the diamond hands. I thought this was so funny, right? Yeah, my friends and I were talking about it. So someone got some data, and we're getting increasingly months of data about retail investors now from Robinhood and Fidelity and other trading platforms. And guys, I don't know what you're doing, but there's a stock market dip. Looks like the men are selling, and the ladies, as we say, have diamond hands, rock hard hands, are not going to dump that stock at all. That's actually fascinating in times like this where we said there's still a lot of uncertainty in the market about China. Here's something about China. And watch this, guys. I get this off one of the research services I subscribe to, and they're looking at air. They're looking at air quality. And look at these year-on-year changes. My gosh. We're looking at 2020, 2021, and horizontally, green is very, very good on the left-hand side. Very, very good if it's really bright green like that. And on the right-hand side, red if it's really, really bad. And look at this, guys. It's really wild when you start to look at the number of days of good air compared year on year. It's very fascinating. For instance, take a look at August of 2021, and we take a look at August down here. We've got 13 days in 2020 where the air was green, bright green, very good, good quality. Take a look at August 2020. We've got 19 days, and it's consistent throughout this entire series. So why is the air improving? Well, think about it. Those factories aren't running any longer, or not at the capacity they were. China is slowing. And we've got data. One of my friends has information. I can't put it here. I've got too much to talk about. Basically looking at satellite images and trying to understand what's going on with the factories and things like that. So China, without a doubt, is slowing, but it's a common problem. And we know in the UK, they're trying to reopen now. This is a picture of a place called Leadenhall Market, right in the heart of the city. And this was taken at lunchtime, and I worked in that area for many years. And I can tell you, back pre-pandemic, you could hardly move during lunchtime because everybody at the banks would rush over and have a couple pints, go back to work, hey, let's start to buy some stocks now, right? But in any case, this is evidence, again, anecdotal evidence, that we're just not seeing the activity rebound like we thought we would in the city of London. Now, granted, work from home has taken its toll, but then again, you have to think about the poor pub owners, and I do actually. I don't own a pub, I own part of a coffee shop, and yeah, getting whacked a little bit. I'm not going to complain about it, it's just nature of doing business. But yeah, it's pretty interesting when you look at this, what's going on. Now, we know that with the reopening, supply chains are stretched or banged up in a major way. And we know the central banks, their response has been to print money. And I've complained about it a fair amount here, as well as in my letters that I write, but they never listen to me. And I don't send email, I send actual letters. But we like to eat. We all like to eat. Here's one I presented my own take on it 2-3 weeks ago, but before this one came out. And you can see what we've got is we've got data going back 1 year and data going back 2 years. And you can see over 2 years ago, the mix is roughly up 10%. It's really wild when you start to think about this. This is food inflation, guys. What's the solution? Well, just eat less, guys. That's what you got to do. Okay, you got to take one for the team, right? I don't know about you, but boy, I don't know. I'd be tough because I actually lost weight in lockdown. It's an even trade. My hair, I didn't get cuts. I call them my lockdown locks, and the hair is like really down to the elbows almost now. But the waist slimmed, and that's the way it worked, right? The waist slimmed, the hair grew. But all joking aside, I'm looking at some Reuters data. I'm looking at the Commodity Research Bureau series, and what we're doing is we're looking at prices of a basket of commodities. And I show these often. I show different series. I show the Goldman Sachs index a lot. But regardless, look at this. I got weekly data. And you can see something particularly interesting, guys. We're in a downtrend, but we're just about ready to punch through that resistance line at the top at 228. I think it's at 231 is the resistance line. But Mr. Powell's got a tough decision. What happens if he tapers? There's rumors in the market they're going to taper. Tapering, of course, means to slow down or even cease totally the large-scale purchase of financial assets. So what do they do then? What happens if they taper? What's going to be the impact on the economy? What's going to be the impact on commodity prices? So he's sort of stuck between a rock and the hard place, right? Jobs in the States, if they stop tapering, if they stop the pumping the money, who knows what the impact on jobs would be? I don't think it would be very positive. So what part of the market is he going to sacrifice? They've just printed too much money. I think what they got to do is just stop and take some pain. And there's a lot of interesting stuff going on across another time series that, again, you got to put it together in an odd way like we do here. Here I've got, this is in the States, these are rents, and they're up from a year on year, 11.5%. Now I've got property in the States in New York. I've got long-term tenants, so I'm not raising rents, but I do know in the building where I own, yeah, they're up about 25%. My God. And we're even seeing it here in the UK. I've got property up north, as you guys know, I got a fairly large property business active in London, Liverpool, and Hartlepool. And we can see rents in Hartlepool in particular. I've got a very nice penthouse up there. If anyone's looking, it's already occupied. But rent on that property is $425 a month. In the past, just to get people in, I've dropped it to $400 if I have to, because voids kill you in rental business. And now, equivalent properties in the same building are going for $475. It's absolutely amazing when you start to look at what's going on with inflation. And you got to be careful, guys. Protect your wealth. Just keep it in mind that there is rampant inflation. They're trying to understate it and trying not to talk about it and trying to ignore it. But when you look at the data, it's starting to show up, and it's been in the anecdotal data like this and other things that I've presented. It's been in the anecdotal data for 4 or 5 months now that we're going to see a wave of inflation like we haven't seen since the 70s, and it's almost here. So how can you protect yourself? Well, Bitcoin is definitely a way to protect yourself. This is really good. I can't even crack it up about this still, right? This is off Twitter. And one of my friends, she grabbed it and sent it out. And yeah, somebody bought some Bitcoin at Coinbase. And then the day later, he wanted to sell it back. And he took a fairly steep loss, a 22% loss. Well, no, it doesn't work that way, guys. When you buy Bitcoin, you want to buy and hold it. And that's what I do. As I shared with you, I was buying Bitcoin every week since 2012, stopped in 2019, December 2019, just picked up the habit. I'm back on the Bitcoin, picked up the habit again earlier this year and been buying steadily. And I buy just because I'm pretty confident that in the future, the Bitcoin I buy today, or even that I bought back in 2012, will be worth more in the future. Now, keep in mind, Bitcoin is programmed, and there will only be 21 million Bitcoin ever. We do know that across the world, wealth is growing. In other words, what happens when these people want to buy some Bitcoin? There's only 21 million. So supply is fixed. The rate of supply is shrinking. And that's what and this chart here, that's what on the right-hand side, if you look at the squares, that describes what we call the halving. And we had a halving on May 21st, I believe it was, of 2020. And you can see the chart right for May for 2020. We saw a nice gap up. And it will happen again in 2024. Now, this is actually an analyst who I know who he is. I'm not going to dox him, so please don't ask me. Dutch guy works for a bank that maybe I worked for, right? You can't really identify him for that. But he's applied a stock to flow model. You can go on Twitter, Plan B, you can find him. Go on Twitter and look. He's made these predictions. He's been incredibly accurate. It's absolutely wild. And yeah, he is calling for $100,000 Bitcoin by Q4. It doesn't mean it's going to close the end of the year at 100,000. It just means that it may touch. And he actually hit the 67 and the 43 for September. He's hit it all. Go look at his tweets. You can see it. So buy some Bitcoin. You might want to hold some Bitcoin. And PayPal's done a wonderful thing. I was going to put a slide in, but I've got too many slides. PayPal's done a wonderful thing, and I'm very impressed. I won't use them. But now you can log into your PayPal account in the UK. It's been in the US for about 6 months, and you can actually buy some Bitcoin. How much? Well, you want to buy £1 worth of Bitcoin, you can. 1,000 pounds, you can. You want to buy one Bitcoin? I think they'll give it to you. There might be some more KYC stuff you have to go through. I don't know about that. I'm certainly not going to use PayPal, or probably not going to use PayPal to buy my Bitcoin. I buy it off an exchange and I put it on my wallet real fast, get it off that exchange pretty quickly. But yeah, get a little exposure to it. Just don't go crazy and spend $10,000 all at once. If you got 10K you want to deploy into Bitcoin, you better have some reliable investments on the other side, because this is not an investment. This is still, in my view, speculative, but dollar cost in. And we've talked about dollar cost averaging before. That's what I do. I've been buying the same amount of Bitcoin every Friday for years, and I will continue doing so. I bought Bitcoin this Friday, yesterday. I bought Bitcoin before. I just continue to buy Bitcoin, and I dollar cost average. I don't really care what price I'm getting it at. Okay, guys, that's it for this week. It's been a real pleasure. Have a good week and make some money. Just don't sit there, buy something. That's what I always tell people. Sitting in cash, oh my God. Just buy something. Take care.